Welcome everyone to another Friday night Crypto Live. I'm excited to be with you guys. We can see that Bitcoin's recovered a bit. It's going to be quite interesting what's going to be coming out of this weekend, especially at the end of the month. But without further ado, Smokey, how are you doing? I know Smiley's not here. He's having a bit of a technical difficulty, but he's here in spirit with us. How have you been?
Oh, good, man. It's been an interesting week. Super excited to be here. Super exciting times that we are in. So it's just going to be a very interesting week to see how we end off this month and where Bitcoin is planning on going. So it's going to be an interesting next couple of days. I think it's going to be very good to see how this market plays out and how our analysis has played out so far.
Look, I think let's start off with the news. You know, one of the things that we have been seeing is MicroStrategy, very well known, big whale. They are continuing to buy Bitcoin, and the CFO has come out to announce that they are going to be pursuing to buy more Bitcoin throughout this year. Now, a very interesting thing that I'm actually seeing, Smokes, is if you're looking at MicroStrategy doing purchases, right, then we're also seeing in the news that the SEC has again rejected another Bitcoin ETF after we know that the plans have been coming out and there's a lot of hope for the ETFs coming out so people can start buying into this. And the SEC is rejecting it even though these are very valid proposals. And what we're seeing then on the third case is where the White House, and a lot of, we spoke about crypto regulations, and we can see that the US is preparing it as a matter of national security. And no, it's not necessarily to do with Biden. This is to do with the actual Treasury coming in to say, you know, we need to tighten things up. It's got national implications. They can see it affecting Treasury. So they're going to be coming in to tighten up regulations. So what am I seeing? We can go to the charts, but I'm seeing that the big institutions are not ready to push this market up here. So from the news side, I think this bit of a rally up is just temporary. But what I'm seeing in the news is that the banks are going to delay this bull run a bit. They're not ready. They first want to get some more ducks in the row, but it is going to come. But we're not going to see it right now.
Yeah, look, definitely, I think from my perspective, looking at the charts, I'm feeling the exact same about the market not being ready to push up. We've seen this week, we've seen quite a recovery of around 15% coming from the $33,000 level. So let's have a look at that and see what's actually happened in price this week. Now, what we can see here on the 24th, which was that Monday? That was Monday, where we saw this bit of a rally. So a total of just over 18%. Let's just get that right there. So we saw a recovery on Bitcoin of just above 18%, which is quite nice to see. Now, a lot of people will see this as a push or a sign of strength or potential bullish continuation for Bitcoin. Looking at the higher time frame, we can see clearly that price is respecting this sort of zone that we've been highlighting for you guys over the last couple of weeks. You know, looking at the overall market structure as we follow the overall sort of trend. And we can see price has respected this region so far. Now, at the moment, it's still holding. We still need to see an upthrust above this $43,500 level. That still remains my opinion before we see a bullish continuation. Now, if we look at sort of lower time frames, we can start sort of identify the story of how and what is happening. Now, looking at a lower time frame, from my perspective, and looking what's going on, because this week, you know, even though I'm not big on news, I have been looking to see what can I see in the market. Is there truly any indication of what's happening? And you mentioned about the whole policy and Joe Biden potentially releasing that sort of statement sort of early in February. But we cannot see anything in the news, and this is why I always say, give me the charts and I'll tell you the news, because the news are not showing us any indication of whether we are going up or down. From a structure point of view, there is still a small possibility that we could still, continue up and, rally. But again, look at the price action that we are seeing in this sort of trading range that we are seeing here. If we look at this sort of region, look at where price is. Now, price is obviously in a potential buying opportunity at the moment. And we can see if we look at various of the alts, they are super low. They're very discounted, like quite cheaply in some cases. Like look at Luna at 48 is an absolute steal. Just mentioning that, but I mean, there's so many other good projects, Solana, and the list goes on, that we could buy for really dirt cheap. Now,
look, we know that what happens in the past is people tend to listen to the news, and people are going, cool, this is it, guys, this is the start of the bull run. We know that the news and people have been talking about the low. We've hit the low, we're going up. That's not necessarily it. We know how institutions work. We can see that the news is sometimes very noisy. So from what we're seeing, I don't think it's going to happen right now. It's going to be interesting to see though how much of the people that do believe that this is the start of the bull run, there might be enough retail capital where the retailers are going to start pushing this price up, and the banks possibly won't have another choice but to actually climb in early. We can see that happen as well. But right now, we can see that the bears are in control.
Well, look at it this way, right? You've been saying there's not enough money that is available to push this market up. Now, you are saying that the retailers potentially could push this up. Now, the reality of that, or the probability of that happening, unless there's a lot of new retail investors to be able to push this market up, because it needs a lot of retail investors. Because these bars, looking at it from a daily, from a weekly perspective, this is a couple of bars. This is a couple of billions, couple of millions. It takes a lot of money. I mean, if you look at the market cap, I just read now earlier, it's like 1 point something trillion down. So there's a lot of money that's been flushed out of the market. And the retail investors, if you look at how far the portfolios are down now, looking at our members where we've told the guys where to exit the market with us, as a suggestion, because we've told them where we are exiting the market and we are completely out of the market. Those guys, if they buy now, they're already in profit. The levels that we've been speaking about for the last couple of weeks in our reports as well as on the show, those levels have been hit. So from an optimal sort of buy entry position, if you had bought into those positions where we've highlighted in previous reports in sort of from December going into January, you would have had a nice addition to your portfolio now if you had available capital to push into your portfolio. I don't think there's, right now a lot of, money coming into the market, like we've mentioned earlier in our discussions, with institutions potentially holding off. Yes, MicroStrategies are, continuously adding to their position based on what we hear in the media. But what I've also noticed is, regarding our discussions on the Shiba Inu, the whole Doge story and all of that, like you hear about these massive whales buying in. But again, the news can be easily manipulated by the big players to feed us what we want to hear. And, looking at the story a while back where that one whale bought in $300 million worth of Shiba Inu, only for Shiba Inu to have a slight pump and then a dump, and look at where they're sitting now. Now, this was, I think, 2 weeks ago, if I'm not mistaken, that we were looking at the story and looking at where it was going. Now, if I've got $300 million, right, and that little pump was, I think this pump here, if I had put in 300 million here and this thing came down the way it did, I would be pretty bleak on being 45%, to call it 40 to 45% down on my portfolio.
And I think that's the problem as well that you're seeing, Smokey, is that where did the institutions invest? They're investing in heavy research and fundamentally backed coins. Right now, it is Bitcoin because it's one of the most favored and it's the one that's been around the longest. The institutions can't invest in asset classes that aren't secure. They simply can't. And when we do see retailers having money and these whales coming out, they're investing it in coins to pump and dump, or they're investing it in Shiba Inu. They're not investing it in the actual coins that's going to cause growth. So again, that even backs more the saying that I have, that there's no money, there's no real money right now to push the actual projects that can pull the ecosystem up to where it needs to go right now. We do need the institutions. And unless the institutions are going to bring very strict regulations, which is going to make it much harder for a lot of people to do business in crypto, unless they do that, we can't see them participating and pushing up this ecosystem to where we want it to go. So, I think retailers are really, they're there to make that million overnight. They want to make $1 million each day. So they're going to invest in these NFTs and coins and not necessarily in the technology, because they're there for the hype. They're there for the $1 million overnight. And those kind of investments and money is not really helping, the crypto ecosystem as a whole grow.
Look, at the end of the day, institutions are also run by people. It's not robots or AI or that. Yes, they use AI to help them formulate key quant strategies and models around how to predict random pricing in the market. But in the end of the day, they are still people driven by fear and greed, just like us. They also, it's all fair and well you're doing a dollar cost average and laddering into your positions, and that's all fair and great. But us as retail traders, you have limited resources and availability to funds in order to ladder into your positions, where institutions have very, very deep pockets. But also keep in mind, the institutions know how to move the market. The candles that we are seeing on the price action, they create that. So when you do see a Morningstar pattern or gravestone Joji or a bullish or bearish engulfing, they create that to entice you in certain cases, because they know how the retailers trade. They know what indicators you use. They know you're looking at the EMAs, the golden crosses,
not
the
just
dead
that,
crosses.
there's a lot of algo bots that's based on a lot of these famous indicators, and not just the famous indicators, but those default settings. So institutions know if the MACD gets to this certain level, there's going to be buying pressure from retailers, and they can use that against you.
100%, and that's why with TradeAcade, and the course that we have designed, we are trying to educate the consumer and our customers how to trade the markets the right way. The way we personally trade it from a fund management perspective, as well as being smaller retail traders. Because in the end of the day, whether you are part of a small bank or hedge fund, you are still seen as a retail trader, unless you are commercial. And that's why a lot of times you find with a certain strategy that it doesn't work. Because look at this week, for example. Now, if you had entered, around about here, let's say you took a breakout strategy and you traded this, there is no ways on the daily, unless you had a massive stop loss, that you would have been safe in this trade.
Agreed, yeah.
Because this is like a 19.77%. That means if you are wrong 5 out of 10 times, you would have blown your account here. And this is a stop hunt. So there's no ways you could have, unless you've got big pockets and you are willing to risk 20% for, a 40% gain, which, it's still a 2-to-1 risk to reward ratio, which is still not bad, but if you're going to trade on these higher time frames, you're going to be very selective. And that is why we use a top-down analysis strategy using pure price action and some key institutional trading strategies that helps us refine this and minimizes our risk. Now, without speaking too much about TradeAcade, we are here tonight to talk to you about how you can receive your salary in Bitcoin the correct way.
And I know people are scared of that. I've seen people, my parents are one very good example of losing money trying to pay out money into their account. So let's touch on this.
Let's chat on that topic, because I can see it in the news and I can see there's a lot of information again through the media. The mayor of New York is receiving his Bitcoin, his salary in Bitcoin, and now his salary is $1,000 down. We've seen one of the NFL players receiving his salary in Bitcoin. He's down from $710,000 to $410,000, also being liable for that sort of tax that he would need to pay on his salary of $710,000, for example. And then we've also seen now the first European PM from Belgium receiving his first salary in crypto, trying to urge other MPs to follow suit. Now, the thing here is that's come to light, and what I think our viewers need to understand that is super, super crucial is, if you want to receive your salary in Bitcoin or crypto, there's two things you need to consider. What is the risk for that potential variation? Because we know you can receive your salary in Bitcoin and price can go up, but you can also receive your salary in Bitcoin and price can come down and you are losing. So if you cannot afford, if your salary is X and you cannot afford to lose that amount that you are receiving because of bills and X, Y, and Z, then you should not be taking your salary in Bitcoin, for example. But if your objective is that you want your salary in Bitcoin and that's so that you can leave the rest for potentially Bitcoin accumulation, then we need to obviously look at maybe getting your salary, receiving your salary into a stable coin like USDT, USDC, whichever. I don't want to go into that whole debate about USDT versus USDC, but the bottom line is take your salary and get it in a stable coin. From there, you distribute and pay out for your bills. And then from there, you can also, switch the remaining balance into potentially looking at an optimal buy entry for your Bitcoin. So that's the crucial thing for me. I don't know what you've got to say about it, but that is what I would say. If I'm looking at, receiving my salary in Bitcoin, I would look at what is the chances of, or the probabilities that price could come down, but looking at preferably taking your salary in a stable coin, for example, and then look at how you can add to your Bitcoin portfolio to optimize and grow your crypto or your Bitcoin holdings.
I think it's about being in control, right? From the experience we've had, especially in the financial industry, we've seen how the institutions work, how the insurance and the banking industry works, and the reason that people currently pay their currency out in fiat, because the structure allows for it. It's secure. They know that their $1,000 will not be a $500 the next day. So it's taken that stress of worrying about your wealth on the day-to-day basis. It's taken that out of control. But they've also then abused that trust factor. So more and more we're starting to see that people are saying we want more control again. We want to take control of our own wealth. Okay, but then you're going to have to learn to do this. Then you need to understand that you need to know how to pay it out. You need to know how to convert it. You need to know that whatever you're investing in, that there's volatility with this. So it's important that people, I think everyone should now learn to become a trader or a hodler, but learn how to work with your money and not just give it to a bank or an institution, because essentially this will teach you to become your own bank. This is why blockchain and crypto is existing. So you need to learn some of the things that banks did, because you need to now do that for yourself. It'll give you a lot more control, but it's some new things that we need to learn and adapt. So I think it's interesting that, for example, when I started to do it the first time, I thought, let me just leave all my money in Ethereum at that time, and Ethereum's going to go up and I can just pull from the interest. But when we started going into a bear run, I started panicking and losing, most of my capital and salary that I paid out to myself. I had to just move it to another stable coin, and which stable coin do you trust? So I started panicking, and I remembered that's why banks are there, but we don't want to go there. So we need to learn how to trade at the right time, and you need to understand that when you need to take profit, keep it in a stable coin and diversify your portfolio where you can, not necessarily even leaving it in one stable coin or one wallet. So I think, again, it comes with experience. Take small amounts of capital, pay it out to yourself, to your bank account, transfer it between a USDC and USDT, start learning the exchange's way of converting the stable coins. I think that's the best place to start.
No, 100%. I think the key takeaways from this is look at receiving your salary in a stable coin. This would be especially if you are getting your salary bi-weekly or at the end of every month, because we know at the end of the month there's always a bit of a dip, because a lot of people, especially traders, tend to pay themselves on the sort of later part of the last week of the month so that they can maximize their gains and then pay out their salary. So there is a bit of a dip when it comes to the end of the month. There's also, certain things like the expiration date of futures and all of these that a lot of people are saying, and there will be, some volatility in it as well. But also the other thing is, looking at if you are receiving your salary in crypto, how can you add this to your Bitcoin or your Ethereum holdings or your altcoin holdings and see what makes the most sense. And are you at an optimal buying? Are you buying at a discount and not buying at a premium price? That is super crucial. Then, like I've mentioned, the time of the month is super crucial. You're going to receive a salary at the end of the month. It might be better to get into a stable coin, wait for a retracement of that price to get a bit of a discounted price before you buy, and then buy and add that to your portfolio. Other key thing is don't risk what you can't afford to lose. If you can't afford to get less than what you're currently earning now on a monthly basis because of inflation and everything keeps going up, rather take your salary in a stable coin. Wait for the price to come to you. That is super crucial. Don't be impatient. Don't think you know where the market's going to go and that you control the market, because we don't. The market can change. It takes one trader.
You just need to be safe.
100%. And the last point I think to sort of finish this off is we all need to learn how to manage our own money. Practice good money management. That is super crucial. I didn't personally grow up that way, and that's why I'm paying the price as I'm getting older. But now that I'm in this game and I'm trading full time and I'm in this crypto space, it's absolutely been a fantastic journey to learn how to grow my money, to learn how to work wisely with my money, but also find these niches of how to capitalize and grow your wealth systematically. Small and steady wins the race. You don't have to be the first in the market, and you don't have to take the biggest trade of the day. So that's it from me, Smokey. Stoney, if you have anything to say, let's finish and let's go watch the markets this weekend, and we'll see you guys on Sunday.
Watch the markets crash. But I agree. I think the fifth thing is, I think, the most important thing I want to close off with. Good money management and being in control of your wealth. I think the better you're educated about how your money works, the more powerful you'll be in growing it. I firmly believe that. 100%.
I just want to say, we don't see the market crash per se as a crash. For us, it's a massive opportunity to buy, guys.
Yes.
The markets are not going to only go up or only go down. So let's see what it does. If you want more information, get onto the Moonacade team. They will get you in touch with our weekly reports, with the information that we share with our members. Thank you. Have a good night, and we'll see you on Sunday.